Welcome to Ring the Bell with the Masters of Marketocracy. Tonight, we're going one-on-one with Glenn Brownworth, and we're going to talk about this earnings week we're into right now. We're in the middle of one of the biggest weeks of earnings reports. So we're starting with a couple of days ago, AMD beat on both the bottom and the top lines, but guided lower due to supply constraints. Glenn, what do you think that says about AMD for the future? And secondly, how do you think it'll affect NVIDIA when they report in a couple of weeks?
Well, this is actually kind of a paradox with AMD, is that I think it was back in the early 2000s, they sold off their fabrication business, their fabrication building, what would you call it, their division. And now they just design the IP. And TSMC does all the actual fabrication for them. So if there's a bottleneck at TSMC, it's for everybody in the industry. So even if AMD has a great product, they do have great server chips right now. And with the amount of data and AI going on, they need those chips. But everybody has to get in line with TSMC. NVIDIA, even Intel has TSMC. TSMC is actually making a piece of silicon for Intel that they're putting on their chips now. So everybody has to wait for TSMC right now, basically.
Yeah, interesting. And it was interesting that the day after AMD, NVIDIA held pretty steady, but it pulled back certainly today with the rest of the market. And I think it was just a delayed reaction to that and people realizing exactly what you just said. It should be affecting everybody. But we'll see how it plays out in a couple of weeks when NVIDIA reports.
Yeah.
The markets opened higher yesterday on the back of a weaker GDP number than expected, which I would say was because it greenlights the Fed to continue cutting. But it pulled back into the red going into the close, I think apparently waiting for the Meta and Microsoft reports. And then obviously, while those reports were a little mixed, the whole market opened down today. Meta and Microsoft were both beat up a little bit today. Now that we have those reports all in, what do you think it says about the rest of the reports and what's gonna happen in the next week?
Well, it was there was pretty much all red today in every single company. So I think it was just end of the month before the election profit taking, or maybe closing out any potential losses, because who knows what's going to come next week. So knock wood. I think that's what a lot of this is. And people are just taking their profits. I mean, the technology business has been doing really well the past 6 to 12 months. So I think people are just kind of covering themselves today. And it's the end of the month, right before the election. I kind of think that this is just, people taking, how would you call it? They're taking
risk off the table.
Yeah, exactly.
Yep.
That's
taking risk off the table.
Yeah.
Well, that leads me into the next question. The election is just less than a week away now, and we don't want to be political here, but it seems like a dead heat right now. What do you think is going to happen after the election? Either way, whoever wins.
Well, I think that the last 12 months, the economy is doing pretty well. We had a 0.5 point interest rate cut. The jobs numbers are really good. The unemployment rate is basically almost near what you would consider as an equilibrium value. So I kind of think that the stock market will still be stable, regardless of what happens with the election. How high it could potentially go, that's still up in the air. I wish I had that crystal ball, but I think
I'm going to take a little bit of the other side of that, Glenn. I think that regardless of who wins, we may see a little pullback after the election. I think that there are so many people so passionate about both sides that there's going to be a large amount of people that are unhappy after the election. And I think that, algorithms are bottom line written and driven by humans. And I'm sure there's some algorithms that will start trading the market negatively if Trump wins, other algorithms that will start trading the market negatively if Harris wins. So I'm looking for some volatility after the election. Hopefully it's not too bad. But yet I think that, to your point, the economy's good and we will end up with some stability shortly after that and hopefully into the close of the year. So I take the other side, but I do agree with you in part. And as a follow-up to that question, what about next year? What do you think the outlook's going to be for next year?
Well, before I answer that, in relationship to volatility, I think that actually might be a buying opportunity. There might be a lot of volatility after the election. So the next 60 days before the end of the year, I think there could be a lot of opportunities going into next year. But I think 2025 will be a little soft, but I think 2026, when some of these issues will be worked out, hopefully, I think that's really the year that things are going to actually do much better. So next year might be gradually kind of dipping your toes back in and buying in gradually, on pullbacks for the year after.
Well, I'll agree with you that I think it could bring some opportunity, and that's how I'm looking at the volatility after the election myself, is that it's going to be a buying opportunity. Looking at next year, I think it depends on how we finish this year. If we get a good rally after that, we get over the volatility and we get a nice Santa Claus rally, then I'm a little concerned about the first quarter of next year. I don't think it'll be a bad year, but I could see a pullback in the first quarter of the year, and we'll look back and see. So if you had to buy one stock today, Glenn, what would you be buying?
Well, I mentioned this once before, and I think it has to do with basically the technology industry is going through a major transition right now, and I want to say Nvidia, but their earnings call is coming up, so I think we're a little bit ahead of the buying the rumor, selling the news. So I think I might actually, if I could share this one thing real quick, show this. Whoops. So this is SK Hynix, and they think that there's going to be a huge market for chips because every card, whether it's for video games, but really for AI, needs a ton of RAM on it because you have to put large language models into it. And I think this is something that's kind of under recognized inside the industry because everybody has to put this memory in, and usually memory or RAM has been a commodity business. But I think right now, something like Micron might actually be a worthwhile addition to a semiconductor portfolio.
Interesting. I do think there's a lot of peripheral opportunities around AI, and so certainly that's what you're calling out right there.
Yeah.
So Micron, and Micron's had a pretty good run.
Yeah.
So.
And if I may, if there's one company I might pay attention to and maybe potentially sell some off, it's Qualcomm. Because supposedly Qualcomm bought a server chip company a few years back called Nuvia. And when they bought that, they got another ARM license, but they don't want to renegotiate with ARM. And so ARM might actually pull away the ARM license from Qualcomm. And if they do that, that's what they call the nuclear option, and that means Qualcomm can't actually sell chips, and that would just be that's a potential nightmare for Qualcomm at this point. So something to definitely keep in mind.
Some great information, Glenn. We appreciate that. And I'll give you two that I actually did do some buying on today because of their pullbacks. One is Meta. I think overall really the report was good, and I think that this thing will be $750 sometime next year. And so I think there's a big opportunity. This pullback is a buying opportunity. And the other is Uber. Uber had a big pullback, way overdone. They really had a pretty good report too. There was a couple metrics that scared some people off, and it sold off pretty big today. But I think it's a buying opportunity. They have a lot of good things going, and that's what I did today. So,
okay.
I want to remind everybody for more information about the Masters of Marketocracy, please visit marketocracymasters.com. And for up-to-date information about the markets and to get to links for our podcasts, links to our newsletters, get subscribed to our newsletter, visit marketocracy.io. And thanks for joining us. We will talk to you again soon, and have a good day.